Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today I am joined by Paul. Good morning, Paul. How's it going?
Good morning, Charles. I'm doing well.
Good. Glad to hear it. Let's start the day, as always, with a little TA. I will just pop up my chart here to start with, and we will take a look at what the ES has been doing as of late. So the market was in a balance area. We saw that up here. It broke out and it started momentum to the downside. We basically very simplistically measure momentum as continuing to make lower highs. So as long as the market is continuing to make lower highs, it still has momentum. Okay. However, whenever the market has momentum, we're always looking for signs that the momentum might be coming to an end, because we don't want to still be shorting. If it's the last of the sellers entering the market, we want to be thinking about going long. Well, yesterday the market created what we call an inside day, where basically the ES just traded completely inside its previous day's range. Okay? That is a sign that the market is cooling off. It is not necessarily a sign the momentum is over. The market could open today and head back down and get lower than the low from last week very, very easily. Okay. The balancing day inside the previous day is sometimes just a chance for the market to cool off for a day, and then the momentum picks right back up. However, there were several signals that might not be the case. There were several signals yesterday that balance day may have been the first day of the end of the momentum down. The first is what we call the value area. The value area is this blue box that you see right here. Essentially, the value area makes up about 70% of the day's trade. So as the value area is moving, it is showing you that a lot of traders are agreeing on that movement. So you can see on this day, the value area was lower than the previous day, and that was telling us there was a lot more sellers in the market, and the market continued lower the next day. You could see this one, the value area was overlapping to lower from the previous day, and the market went lower the next day. Okay, so seeing that this one was overlapping to higher could be a signal the momentum down is over and the market is ready to start to balance off that momentum. If it's going to balance off this momentum down, there is two ways it can do so. Okay, you got the momentum down. One way is it can go sideways at lower prices for however long it needs to, and then it either breaks higher or lower from there. The other is it reverses with price and starts to head back up towards this previous balance over here. So that is kind of the question we're asking ourselves this morning. Which of the three scenarios is taking place? Was this just a day where the market was cooling off and we continue the momentum lower once again, in which case we should be very, very bearish? Is this the beginning of balance? And if that's the case, are we reversing with price and heading right back up, or are we going to spend some time going sideways down here at lower prices? And I would say, even though yesterday was a boring day on the ES, because there were very few good edges throughout the day, being that it was such a tight range inside the middle of the previous day's range, okay, it did present us with some good opportunities for today. And those opportunities exist at yesterday's high, which is 54.93, and yesterday's low, which is 54.43. Okay, that 50-point range is where all of the opportunities are going to present themselves. So if we were to open right this minute, we still got 25 minutes till the market opens. But if we open now above yesterday's range, that is bullish. Okay, that is a gap up, and it increases the odds the market wants to go higher. Any new buying today, whether we open inside yesterday's range and push above the high, or we open above the high and turn it into support, either of those scenarios, new buying this morning above 54.93 is bullish for continuation higher, at the very least to test the high from Friday. Okay, that is 53.33.
Was about to ask you about that, Charles. Is that what you see as the next target? If it goes on up, would Friday's high be your next target for resistance?
Well, there's little bits of resistance in the cumulative, here.
Right.
So I don't think it's going to go in a straight line. But yes, I would say if we get support at yesterday's high, we will go to Friday's high by the end of the day. We will have worked our way up there. That is my target.
Because for the NQ, that's almost up to 19,000.
Yeah, let me look at the NQ because if I remember correctly from yesterday,
A lot the same, but it's...
Yeah, there were multiple resistances I was watching on Q. It wasn't just the previous day's high. Let me find it. Yeah, so the Q has this big node of liquidity. There's one at 18.832, and another one at 18.895. Those could be enough to stop the market to where it might not get to yesterday's high. But yes, I would say ultimately Friday's high is the target to the upside. So it'll take a lot of grinding to get up there, but that's where it would go.
Cool.
So again, that is the scenario if the market either opens inside yesterday's range or above it and turns, yesterday's high into support. If that doesn't happen, again, if we open with the gap or we open inside yesterday's range and we can't stay above yesterday's high, I would think the target is to move down and test yesterday's low. Okay. So basically they either bring in enough buyers up here to reverse the market bigger picture, or we assume the market is balancing with time. If it's balancing with time, it should have no problem getting back to yesterday's low. So right from yesterday's high, there is opportunities. With support, there's an opportunity to go long to get to Friday's high. With a lack of support, there's an opportunity to go short to get to yesterday's low. Okay? Once it gets to yesterday's low, that's the one that tells us bigger picture what's going on. If we poke below yesterday's low and get new selling there, we get resistance at yesterday's low, that tells us bigger picture, the momentum to the downside will continue. It tells us this was just a cooling off day and the market is going to continue to head lower. So if we got that, I would use Friday's low as a target to the downside. So support above yesterday's high targets Friday's high. Resistance below yesterday's low targets Friday's low. And any look above and fail or look below and fail of yesterday's range targets a move basically to the opposite end, because that means we're balancing with time.
Given where we are looking at the overnight appears to be net long.
Yes, sir.
So they're kind of thinking it's going to go up with any luck. And if you have a look above and fail, I'm guessing it would start accelerating once it hits about the midpoint of where it traded last night. So I can't quite see. Is that 54.87? Somewhere in there.
Where it would accelerate
Europeans
back down
would start
to?
liquidating their overnight positions.
Yeah, I would say the target would definitely be at least yesterday's closing price, which on the ES was 54.80.
Cool.
But yeah, I mean, that's anytime you have a gap, forget what's happening bigger picture with the market, that this is potentially a reversal level, longer time frame on like a weekly time frame. Anytime you have a gap up, it's basically all about the gap. If you get the gap up and the market opens and it just keeps going, it doesn't fill the gap, all those overnight traders are staying in their trades. New traders from the regular trading hours are chasing, and the momentum begins. And it can just keep going as long as it can keep going. If it fills the gap, okay, and it finds support on a gap fill, same story. All those overnight traders are still in their trades. The new traders are piling on. You can get that momentum and go. But if you fill a gap and you don't have that support, then you squeeze anyone who was buying at the highs, anyone who bought right at the market open, you squeeze them and you squeeze those overnight traders. So yeah, you then expect a pullback down into the previous day's range. Honestly, looking at the chart now, I would say even probably to the POC from yesterday. So if they fill the gap and they can't turn that into support, they'll come all the way back down to the 54.65 area.
Cool. Can you look at oil for a second?
Can I look at oil? Of course.
Because you were talking about it the other day and how it slipped, and it's just one of those things that I was noticing. The price of oil is down on the year.
Oh, yeah. It should flip here pretty soon. It's near its lows. Let me actually go to the weekly real quick just to get some context.
I read in Reuters, I think it's down like 25% this year, year to date.
Yeah, it's looking gnarly, but again, so for those that are looking at my chart, you can just see this is a big range, but you can just see there's been a lot of defense of oil prices in this area in the past. Okay?
Yeah.
So we're talking between basically $64 and $68. The market has stepped in again and again and again. So my guess is you could draw a channel on the more recent, let me go to the daily again. You could draw a channel on it that looks something like this right here. And if it finds support literally in the next day or two and starts to reverse back up, they'd be coming back up to test that channel once again. So they'd be coming back up towards like 72. But if they start to break the lows, if they break below, 66.90, that is bearish. But I don't think they will. I think they're going to reverse because of this previous support again and again.
Yeah, I mean, the thing I always get out of looking at oil and some of these other items that are actually consumed, the physical deliveries and stuff like that, is that you've got all these producers worldwide. Lord knows we've got them here in Houston that very much, will step in and do their production or cut their production. I mean, it's a totally different dynamic to me than just the indexes that we normally are looking at to figure out what the big boys here are actually producing millions of barrels of oil. So, and that they've got to unload at some point.
Yeah. And then you also get into the conversation of oil reserves, right?
Yeah.
Big corporations and countries like to buy up oil when it's cheap to build up reserves. So, the price dips enough and there's buyers. There's always buyers because people know that oil will always have value. So, yeah, it's a different type of market. I do think as a swing trader, this is a great low to take a swing at this thing because it should bounce here. I'm not saying necessarily today, but this week for sure.
Yep.
And if you look at the last few days, you've just started to make higher lows on a daily time frame. And yesterday, or I guess today so far, made a higher high. So that's a sign the momentum down is coming to an end and it's ready to turn around and come back up. And like I said, I would just draw that channel and I would look for it to head up and test that trend line in the days and weeks ahead. Good catch, Paul.
I'm trying.
All right. Any other questions for me on TA? From you,
I
Paul,
like
or the
RK's
chat?
comment.
You're good?
Yeah. RK's got a good comment. I like that.
RK says, wish I could start every day with a little TA. You can, my friend. Come here. Okay. Well, Paul, do you have anything newsworthy that you wanted to talk about?
There's not much working about that I think is going to move the markets right now. I did finally found something in Al Jazeera that I thought was worth pointing out. The reason I read it is that they had an analysis on what's going on in France with just the politics in France. Al Jazeera can give me a good perspective on what's happening in these other countries that I don't get from reading the U.S. press. And the same for Deutsche World. So I picked those up. I kind of liked it. And then within Reuters, again, it's also discussing the oil price and waiting on interest rate decisions. We are 8 days out, September 18th, to FOMC minutes release. But other than that, not a lot going on. I continue to tinker with looking at options and scoping them out and comparing them just piece by piece of what options would look like for me to start trading them, because I haven't been trading options instead of futures for quite a while.
Mm-hmm.
And I just did the math myself, and it looks like these OEX options on parity, each OEX option is equal to about 2 micros when I do the math.
Okay.
So, because a single NQ, well, let's see, now I should have had my numbers run up for you, but a single ES contract is valued at about 250,000, and when you buy an OEX index option, it's really got an underlying value of about 50,000.
Yeah.
So two micros per option is what you'd be looking at. So I'm going
Yeah,
to
I
keep
do have
toying
a
with it,
hard
and I'll
time
try
because
to put together a spreadsheet.
I use options and then I hedge with the futures for the options.
Yeah.
So like, let's say today would be a great example. Let's say the market is filling the gap and I feel like it's going to find support. I'm feeling confident. I think the market's going to go higher today. I would buy a call at that point, but then I would put a stop sell order on a futures contract right below yesterday's high. So it's like, I'm in my call. I think the market's going up, but if I'm wrong and the market starts to go down and fill that gap, I can bring in a little bit from the futures. But it is tricky, I find, to perfectly sync up the value of an option to the value of the futures, because the futures never change. A tick is always worth the same amount no matter what. Whereas the options, both the time decay changes the value of the option and the implied volatility, which is where it gets tricky. So like, you can buy an option, a call option, and the market can go up and the option might not really be worth that much more because, people are selling that option rather than buying it, and vice versa. It's very confusing to line it up.
Mm-hmm. Absolutely.
To try to get like perfect mathematical equations, but it is a great strategy using futures to hedge options trades.
Cool.
All right. Well, we do have a question from the chat. UGO said momentum is dying. You're right. Is it dead? We'll find out. The only thing that would make me think we still have momentum down is new selling below yesterday's low. Otherwise, yes, I will assume the momentum down is over. He then said, when you draw the channel on crude, why did you pick the top of the previous channel? So I was just very quickly eyeballing it. There we go. Okay. So yeah, that was for the bottom of the channel. This is not crude. That is ES. There we go.
Were you trying to bring the chart back up for us to see?
I was, yeah, but then I realized I don't have my 2-shot up. Thank you. There we go. Yeah, so the channel clearly has a trend line right here. Boom, boom. But figuring out the bottom, it's more like a megaphone, actually. Figuring out the bottom is a little more tricky. So just very quickly eyeballing it, I thought if you started here and you went like that, this is a concept called previous resistance becoming support. So the market was trying to break through this level and it couldn't. And then it did break through. So the question is, if you leave that trend line on your chart, even though the market has broken through and is heading a new direction, whenever the market comes back to it, sometimes that becomes support. Okay. And so I just very quickly eyeballing it, saw that as a potential there. It became support in here. Could it become support again? Well, it did 2 days ago. So if my thesis is right, that we're going to reverse and head back up, that would be the channel low. But looking at it again and really taking some time to dig in, it's not necessarily a channel. I would focus more just on this trend line from the highs and the previous lows. Whoops. Uno momento. There we go. Yeah, and I would just focus on this previous support in here. This is good, strong support. So that would be where I'd be looking for support. And then if I'm saying to myself, okay, I want to go long somewhere in here because the market loves to find support in here, where am I going to take profits? Definitely that trend line down is the place to take profits. Okie dokie.
Very cool.
All right, guys. Well, with that, I think we'll say goodbye this morning. We got 9 minutes till the market opens. You guys know how I feel. It looks like we're going to open with a gap up. That is the first bullish signal. If they can hold the gap, we're looking to test Friday's highs. Okay, both markets. If that gap fails, we're looking to test yesterday's lows, both markets. If we get new selling below those lows, we should be very, very bearish for continuation. If not, another sideways day.
Very cool.
All right. Thank you, Paul. Thank you, everyone.
Charles.
And we'll see you next time.
Have
Bye.
a good day.